you should go back to your booklets, right? And so vehicle finance, okay, under vehicle finance, you should have buying new. You should have something talking about buying a brand new car. For that, you have depreciation questions. You have trade-in questions. You have sticker price. Like, what is the sticker price? With trade-in, you have to take off before taxes. That's the key, okay? With trade-in, you have to take that off before taxes. What else? I'm not going to cover everything. I'm just going to give you an overview, okay? And so we have depreciation, trade, and sticker price. Predominantly, that's what you need. You basically, when you're buying new, you're always going to apply 12% tax, right? GST and PST. The back of your formula sheet has all the taxes applied, right? And so then you have a private sale, and that's also under the used category, right? Actually, hold on. I'm going to redo this. I'm going to call this used. Used, right? And then you branch off, right? It could be a private sale, in which case this is the formula. Purchase price, right? Plus, this would be the book value or the price, depending on which one is higher. You should remember that, times 0.07. You would be applying a PST on the greater of the two, right? And I'm going to run out of room here, but that's okay. Plus safety times 1.05 plus lien, no tax, plus parts and labor. We would multiply that by 1.12. 12% taxes on parts and labor. Do not add taxes after. When you do all of this, do not add another 12% or 7, whatever. Okay. I'll do the attendance a little later in case you're wondering. We have dealer. You pay 12% tax. So that's just what I'm going to say there. When you buy from a dealer, it's going to be safetied already, so you don't have to worry about paying for safety. If there's a trade-in, it's still the same as before. You take it off and then you add the taxes. It's the same. We have lease, right? Total lease cost, right, would be down plus payment times 1.12 times the months, okay, plus the mileage times 1.12. because it's also taxed. So you would have to figure out mileage, like how much did you go over by, and then multiply that by 1.12. They might be slightly different in your booklets. Just an overview. With lease, you need to know the advantages. No advantages and disadvantages of buying new, used, lease, right? Like why would you recommend to buy new? Why would you recommend to buy used? Why would you recommend to lease? And then same thing, disadvantages. Have two for each, right? And your study sheet, just so you're ready for that. Factors affecting your insurance premium. What affects your insurance premium? We talked about at least 4. There are more, right? Your deductible, the type of car you drive, where you live, what you use it for. The list goes on and on. Fuel economy. The fuel economy formula is just liters divided by kilometers times 100. That's the formula like this. If the fuel efficiency is given, I'm going to use it to determine liters needed for a trip, or distance that can be traveled with X number of liters. Right? You can go either way when you're given the fuel economy. Right? So example, if the fuel economy is 8 liters per 100 kilometers, right? This could be set up in 2 ways. You put the 8 liters over 100 kilometers, right? You want to know how many liters are you going to need to travel, let's say 2,000 kilometers, and then you do the work. Or you could use that fuel economy, and they could say, hey, what if you gas up with 75 liters? What's the distance in kilometers that you could drive? So you cross multiply and divide here, or you cross multiply and divide like this, right? So they would each give you what you're looking for, okay? And this is just very a big overview, no details, but I just thought I'd go over that before we move on to the review part. Then we have geometry is new, you should know that still. Trig is also fairly new, so you should remember how to do that. So I think I'm going to dive into the exam booklet now. So take the June 2019, I think it starts with vehicle finance. Go ahead. Oh, if you were writing stuff down, finance is a big thing. Financing, right? To find the payment, you go price minus down times the table rate divided by 1,000. Okay, that's how you find the monthly payment. If you want the total interest, you go payment times 12 times the number of years minus, this is called the loan here, this part. When you subtract it, that's called the loan. So you would subtract the loan from it. Oops. And that will give you the total interest paid. Interest, just the first month, you go loan times interest rate, not table rate, divided by 100. All of that divided by 12. And then remember that principal is going to be the payment minus the interest here, if you want to know the principal portion paid in the first month. So I would strongly encourage you to have that stuff on your formula sheets. Study sheets, I'm guessing. Okay. Let's do the attendance before I start here. That gives you a chance. Let's keep going. So Marjorie borrows $18,000. Okay, so highlight borrows 18 grand to finance the purchase of a car. She makes monthly car payments of $325 for 6 years. Calculate the total finance charge, the interest, and total finance means they're asking for total interest. Okay, she will have to pay for the loan. Okay, so the payment is already calculated, and notice never add tax to a finance question. Like some students from time to time will add taxes to that. Don't do that. We won't do that to you. Okay. So this is how much you're borrowing, 18 grand. So total interest, if you recall, is payment times 12, because 12 months times years, minus the loan. And the payment is given to us times 12 times it's over 6 years, so it's 72 months. You're making 72 payments of 325 minus what's the loan, what you borrowed, right? Okay, so where's my other calculator? There we go. So 325 times 72, that's 23,400. Show your work. Okay, that's 5,400. Just to be safe, round to 2 decimals. Put the 2 zeros on there just in case, right? Because if it's money and if it's 0.5 and you just put 0.5 instead of 0.50, you lose half a mark. Okay. So write that down. So this goes straight to the interest part. Let's skip defining the payment. Okay. Some of my questions, most of my questions would have asked you to first find the payment, but they just want you to, they want to see, do you understand how to find the total interest paid? Total finance charge, same thing. Good. So I strongly encourage you to try these again after we're done here. Cover the answers and just try it, right? Maria is buying a new vehicle. That's probably important to highlight, right? The new part, new vehicle. After making a down payment to the dealership, there's a down payment mentioned. Those are key words, right? And then finances the remaining balance with her bank. The table below shows a detail of the purchase. We have done something like this. I know I did. We did it in our notes, and there was also on the test. Calculate the total amount that will be paid to the bank. The total amount that will be paid to the bank. Okay. So the bank would get, we would have to take the vehicle price for sure, subtract the down payment, because that's what you're paying, obviously, right? So add the tax, right? And add the finance charge. The down payment brings it down. So you're not paying that to the bank, you're paying it towards the vehicle. Okay, so that'd be 29,000 minus 8 plus 3770, because the taxes you have to pay, right? That'll be, you would be adding that to your loan. Okay, plus the finance charge. And let's see what we get. And it's 27,156. And notice this. After, it says here, after making the down payment to the dealership, Maria finances the remaining balance through her bank. So we take this off, and then the remaining balance, which would be your taxes and the finance charge, the bank figures this out, and that's how they determine what your payment will be, right? They figure out how much total interest will be, and then they add it to that, divided by the number of months. So this is how much you would have to still pay them back at the end. Okay. Calculate Maria's monthly payment. So we just take that number because it includes interest. Okay. So we will take that number and just go 27,156 divided by 48 months. And that is 565.75. And note we did not use a chart of any type to come up with this, only because they gave us the total interest you paid. Okay. Because the interest was included in here, we could just divide this by the number of payments to get our monthly payment. Otherwise, we would have needed a table, right? If this is how much you borrow, for example, then you need a table to come up with the payment. Okay, no table required since A gives total including interest. So whenever you go get a loan, you will sign a bunch of papers. On that paper, I can guarantee you, this is government, right? There should be a cell, a box telling you how much you will pay in interest total. So it might be the dealership that you finance through or the bank. If you do it to the dealership, they really are using a bank, right? there should be a column that says how much you're paying total interest over 5 years, 6 years, 7 years, doesn't matter. Okay, so they calculate that and add it to your total. Okay, next page. We're on page 3, by the way. Bottom has a page number. Question 3. Explain one advantage of financing the purchase of a new car rather than leasing it. So why would you rather finance versus leasing? So this would be buying a car versus leasing it, right? Financing, you eventually own the vehicle. That's one, right? If you finance, you eventually own the vehicle. Payments eventually stop, right? You can say that. No need to worry about mileage. So you have to be specific. Mileage charges, right? Like if you don't need to worry about staying within the limit of kilometers that a lease would normally have, right? So based on this statement, I'm just giving you more than one, of course, right? This one of them would be enough. What would be another event? No wear and tear, or you're able to modify it or customize it. Remember that one? You're able to customize the car, comma, since you own it. Even though you're financing it, technically it's yours. You can make changes to it, right? If you can't make your payment, the bank would come and get it from you, but you're able to make the changes you want. Yep.
So if you start making the payments, right, and you already customize it, do they charge you for
No, they would just take the asset, they would take it from you and sell it and try to get as much back as they can. And then if you still owe something, you're liable for it. They'll come and they have their ways. They have like credit agencies. They just like, hey, this guy isn't paying. Can you take care of that? And then they somehow get their money back. If not, then they'll just wait until you make a paycheck and they'll take it from there. Yeah. And your credit goes down the drain if you default on your loan. Have you ever seen the repo shows, how they repossess? Banks actually have, like, there are companies that if you buy like an expensive yacht, for example, and you can't pay it, some folks just keep using it, they don't return it. So there's this company that they'll come with a chopper when you're like docked somewhere, they'll come with a chopper, jump in the yacht and just drive off with it. Yeah, they can do that because it's technically it's the banks. Yeah. Never seen those shows? They're awesome. Anyways, Luke, the airplanes, you name it, they do it with anything. Question 4. Luke purchases a used vehicle privately. Very important. There's used and it's private. The vehicle costs 12 grand, right? That's the price of the car. It has a book value. There it is. That's also a keyword of 10 grand. He also pays $50 for safety. All those are keywords there. It's filled with keywords. Calculate the total amount Luke will pay for the vehicle after taxes. This is saying including taxes. And notice how many marks. 3 marks is a lot. Okay, so this is the formula I made, right? It's nowhere in any textbook. Private. It will be the cost of the car. It will be 12 grand. Plus, here you will figure out the PST. The greater of the two. This is still greater. So 12 grand comes in here. You multiply that by 0.07, 0.0, right? 0.07, not 1. Plus, there's a safety, and we know that that is taxed, that only gets taxed GST. We go 1.05 because we want to pay the 50 and the 5%. That's it. There's no lien, there's no parts and labor, nothing like that. So it ends there. So 12 grand. Oops. 840. This is the GST, folks, right? PST, sorry. PST here for the vehicle, and this should be not times, it should be plus, by the way, right? Plus, and that would be 5250. For this is the safety, right? Safety, this is the GST, and this is the price of the car. Safety is already including taxes. Now we're going to add the PST to the price of the car and just add it all up because that'll be the total, right? And that is 12,892.50. That's the total. Terrell, you there? Okay, Enzo, I don't know if you're there, but I didn't hear from you earlier. I thought I saw Enzo somewhere there. Okay, go ahead. Question 5, state one factor that affects your car insurance premium. Where you live, type of car you drive, deductible. When it says state, you don't have to explain a whole lot. Deductible, third-party liability, type, what you use it for. Is it all-purpose? Is it leisure? Is it farm, right? Is it layaway for storage, right? And also, you have to be able to tell me, for example, if they asked, how can you decrease your insurance premium, right? How can you bring it down? Please don't tell me get a new car, because the context will be, if you're already in the agency, you're at your auto pack dealer and you want to decrease your payment, right? You would probably have to increase your deductible, right? The higher your deductible, the less likely you are to make a claim, right? You can decrease the third-party liability, right? You can opt out of loss of use. Like, I don't want a loaner car if my car gets into a crash, right? Or something like that. So you gotta be, you can't change where you live, right? Like you can, I guess, but that would be way out of the scope of that question. Question 6, you decide to buy the car you've been leasing. You're buying the car you've been leasing, so leasing is important for 3 years. The car had a sticker price of $32,000 before tax. The residual value is 40% of the sticker price. They want the residual value after tax. So this is leasing. This isn't a year-to-year depreciation. The residual value is what is left after tax. So residual value would be 32,000 times 0.40, because that's 40%. We'll figure that out. It's 12,800. Total would be 12,800. What would you tax this? 12. Can you tell me why it is correct? Just for the folks listening. You just know it's 12. That's actually good. You memorize it. It's 12. When you lease it, where do you lease it from? A dealer, right? It's a dealer. So that's why you lease from dealer. So even if it's a used or new, it's always 12%. So 12% tax, right? No matter what. 14,336. Boom, 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 boom. 2 marks. 1 mark here to get that. You would get another mark here to get that. It's testing your knowledge of, you know what you tax it, right? Sticker price, that's what you calculate. So when you lease, there's a guaranteed residual value. Sometimes the word guaranteed residual value is used, so it'll just be like a one calculation to get there. When it's a depreciation question saying that the car depreciates 15% over year over year, then you have to do the step by step, right? Year 1, calculate how much you lost, subtract it, do the same thing again for second year, and so forth. Doesn't end, it just keeps going. Okay, question 7. At 10 o'clock, I'll stop. We'll watch the memorial video for Dr. Heshka, okay? Just before 10, I'll stop. Juanita buys a new compact car. I'm going to highlight new. She's responsible for the operating costs. Cost per kilometer, this much. Monthly car payment, this much. Juanita drives 15,000 kilometers per year. Calculate the annual operating before tax. Sorry, kind of off track there. There we go. Operating costs is, right, we talked about it, like maintenance and stuff. What does it take to run that vehicle, right, on a regular basis? So cost per kilometer is this much per kilometer. So mileage, I guess you can call it. We have 15,000 kilometers. We're going to multiply that by that rate using all decimals, right? Before taxes, so we won't have to worry about taxes. That's 1,890. And it is assumed, like government companies and government agencies or whatever, they have a certain cost per kilometer that will come with the car. Like it's just a number that kind of approximates how much you will actually have to spend on it. Oil changes, you name it. So this is how they come up with it. So we figured out for the year, annual is for the year, right? So the mileage is done. Now we do the payment. For the year would be 350 times 12. And that's 4,200. So 1 mark, and then total for the year would be 1,890 plus 4,200. That'd be 6,090. There it is. Good. Last one for vehicle finance. I think at least, yeah, last one. So we're on page 8, question 8. Jafar owns a truck and a hybrid car. Fuel economy, right, for the truck is 9.4. Fuel economy for the car is 3.5. Jafar drove 17,000 kilometers last year. Calculate, this is a bit trickier, how much less fuel, right? Calculate how much less fuel would be used if you had driven the hybrid car instead of the truck. Various ways of doing this. So basically my game plan is they're giving you the fuel economies for both. So we're going to go car and truck side by side. For the car, you use 3.5 liters per 100 kilometers. They give you the kilometers, so you plug that big number in here and you'll find out how many liters you will need for that. Right, you cross multiply and you divide. So it's 17,000 times 3.5 divided by 100. And that's 595 liters for the car. That's how much fuel you would need for the car if you drove 17,000 clicks. For the truck, and that's a pretty good truck, I must say. That's very low mileage. Must be a small truck. 17,000 kilometers here too. You're going to find out how many liters. Cross multiply and divide. That's 1598 liters for the truck. But we're not done yet. How much less fuel? Less fuel, 1598 minus 595, 1,003 liters less fuel using the car. Let me see here.